Getting rich with crypto isn't something that typically happens in a flash. Sure, every once in a while you'll hear about someone who hit it big seemingly overnight, and hey, maybe those stories are even true. But they're the exception, not the rule. Those stories shouldn't be treated like a roadmap for your own journey. Even if you tried to copy exactly what that person did, chances are it wouldn't work out the same. In reality, most people who chase those kinds of quick wins end up losing a lot, if not everything. That's just how it goes. If you're serious about building wealth through crypto, you've got to develop some real backbone, no limp noodles. Here, you need a mindset built for the long haul. You've also got to diversify, and yes, I'll admit I'm biased. XRP is my top coin and holds the largest chunk of my portfolio. But I own a wide range of cryptos, and I think that's the smart way to approach it. The truth is, for most people, real financial transformation through crypto takes years. But here's the wild part. Even though it's a multi-year grind, the majority of your wealth will likely come from just a few explosive days. That's something most people don't really grasp. And that fact becomes especially important when I bring up this Cointelegraph piece a bit later, which warns of a potential drop in XRP, even if that happens. And I'm not betting on a crash. It's not a big deal in the grand scheme. I strongly believe we're heading into a face-melting bull run before this cycle ends. Some analysts are calling for XRP to hit double digits. Not saying they're 100% right, but I don't think they're crazy either. Those predictions aren't as far-fetched as some would believe. So even if we see a dip before things really take off, it doesn't change the game. Because as I always say, when those massive moves happen in crypto, you're either in the market or you're not, and if you're not, you miss everything. This comes straight from Negentropic, the account run by the co-founders of Glassnode, a leading on-chain analytics company. They posted this just yesterday, and honestly, I'm really glad they did because it's something I've talked about multiple times. It applies not just to crypto, but to the stock market too. The crazy part? Most people still don't understand how important this is, so let's spread the word. Here's what they said. During the 2021 crypto bull market, just 14 days accounted for 90% of the total gains. Let that sink in. There are 365 days in a year, not even counting leap years. And out of all those days, only 14 were responsible for nearly all the profits. That's a tiny fraction, which means the vast majority of days, they didn't move the needle much at all. This is exactly why I keep saying you either have exposure when the market takes off, or you don't. And the only surefire way to guarantee you do is to simply hodl. Hold on through the boring stretches, the dips, the sideways action, because you don't need a complex trading strategy. You don't need to try and time the market or jump in and out constantly. Yet that's what most people try to do. They overthink, they panic. They assume they've picked the wrong coins, so they sell early, switch things around, and end up sabotaging themselves. That's how people lose. The ones who win, and this is backed by hard data, are those who buy and just stay put. They don't touch anything. They stay patient. And one day, they wake up and realize their portfolio has become a massive part of their net worth. At that point, sure, take profits if it makes sense. But the key is staying invested. Trying to outsmart the market usually backfires. That difference between a 2x return and a 10x return, it comes down to whether or not you were holding during those 14 golden days. And it's even more intense than that. Those days didn't happen randomly throughout the year. They clustered. During the bull cycle, which we know only comes around roughly every 4 years, so to even get to those handful of key days, you've got to stay committed through years of buildup. There are no shortcuts. I always tell people, and I'll say it again now, I don't know the exact day the market will explode. I never have, and I never will. But the difference is, I don't need to. That's not a burden I carry. What I do know is this: when the market goes vertical, I'll already be positioned because I spent years building that exposure, and you can do the same. You just need to avoid making the common emotional mistakes that take most new investors out of the game before they even get started. That's why I shared Negentropic's post on my own feed earlier and added, I wish more people understood this. This is why I hodl. Check out this new post also from Negentropic. It reads, the last time our network growth indicator surged like this during a liquidity reset was April 7th, the global bottom for this year. That, of course, came after the tariff panic. From that point, Ethereum skyrocketed by more than 100%. And guess what? It's happening again. You already know what that means. Yep, altcoin season is knocking. Short-term pullbacks. Who cares? They're just noise. They won't change where this is headed. Negentropic nailed it with this observation. Now here's the chart being referenced, originally shared by Bitcoin Vector. It shows something really important. While macro liquidity might be on pause for now, Bitcoin's network fundamentals are gaining strength. This isn't a breakdown. It's the setup before the breakout. So here's what's happening. Liquidity, might be cooling off temporarily, but network growth is ramping up. Once liquidity comes roaring back, Bitcoin, and by extension, the whole crypto market is going to be fully loaded and ready. We've been tracking this on the channel. Global liquidity is still trending upward. It hasn't reversed. Based on historical data, we also know that Bitcoin tends to trail macro liquidity by around 12 weeks. So if you zoom out just a bit, you can start to see how this lines up. The current trajectory hasn't finished playing out, and based on what we know, the next leg is still ahead. Crypto tends to follow the global liquidity trend about 90% of the time. So what does that suggest? Can we know the future with 100% certainty? Of course not. But if you're asking what's most likely, let's be real. The answer is up. We're not done yet, folks. Far from it. Let's check out this recent post by chart analyst Eggreg Crypto. You're seeing the XRP chart on your screen right now. He shared a 4-hour time frame update, zooming into the short-term XRP price. Action to identify where things might head next? Here are the 5 main takeaways from his breakdown. 1. Bullish closes. XRP has now seen multiple candle closes above the $3 mark, and that's no small thing. Round numbers like $3 tend to act as psychological checkpoints for traders. They inspire confidence, and you can bet people are paying attention to candle wick behavior. Most of the wick action is coming from the top side, which tells us there's some selling pressure, but it's far from overwhelming. The candle bodies are staying above $3, which is a strong sign of continued strength. Let me jump in here. This post came out yesterday, and I've seen similar commentary from other chart watchers. For example, Casey Trade mentioned it looks like sellers are getting tired. Different words, same takeaway. Selling pressure is fading. And that view is holding up as of right now. I'm recording this at 9:46 p.m. Central Time on Wednesday, August 6th, 2025. 3. Possible retest incoming. He points out that XRP could pull back briefly to the $2.96, $2.93 range. And guess what? That did play out today. The chart touched that zone almost on cue. For critical support to watch, Eggreg emphasizes that $2.80 is a must-hold level. If XRP dips and closes below that price, it could threaten the bullish structure. And I'll say that $2.80 range has come up time and time again from various analysts. Sure, some might round a few cents differently, but the consensus is clear. That level matters. 5. Upside targets. If XRP can close above $3.18, that's the first bullish checkpoint. Next stop, $3.25. From there, close above $3.33, and then $3.45 would be strong confirmation that we're heading toward a new all-time high. And honestly, as far as I'm concerned, that's only a matter of time. No matter what kind of doom and gloom headlines outlets like Cointelegraph try to spin, we're still not done here, folks. Let's look at this headline from Cointelegraph. XRP price faces full pump retrace if $2.65 support fails. Yeah, that sounds dramatic. And this $2.65 level, that's another key support zone I've seen pop up across multiple analysts' charts. So there may very well be something to it. But look at how ominous this article sounds. And while I'm going through this, just remember what I said earlier in this video, because it still applies. The people who make serious money in crypto are the ones who've accepted that they don't get to pick when the market explodes. Meanwhile, we've got the impatient crowd out here crying for their Lambo like spoiled kids. But I want my moonshot now. Settle down, cupcake. This market doesn't cater to tantrums. The grown-ups know the deal. You're either in win. It moves or you're not. That's the reality. So let's talk worst-case scenario here. No, I don't actually think this is happening. Not even close. But let's just entertain the idea. What if we really were slipping into a bear market? A huge stretch. But even if it happened, I wouldn't change a thing. I'd keep holding. Because even if it takes years, another bull run will come. That part isn't guesswork, it's pattern. When that happens, I'll already be positioned. Because here's the part I can control. Me, my emotions, my decisions. I've got the discipline to hold and do nothing after I've bought in. And you know what? Most people don't. Seriously, doing nothing is harder than it sounds. People feel this compulsive need to constantly do something with their investments. And more often than not, it hurts them. Now, back to this article. XRP recently pulled back nearly 19% after hitting a new yearly high of $3.65 on July 18th. Since then, it's been stuck battling to reclaim that $3 to $3.10 resistance range. On Saturday, price dipped into the $2.66 to $2.80 support zone, but rebounded the next day, printing a higher low, a healthy sign. But here's the part that spooks people. According to CryptoQuant, the pullback appears tied to large holders, the whales, unloading their bags. That's right. Whale wallets have reportedly been net selling since around July 9th. shedding roughly 640 million XRP, which is about $340 million worth. Naturally, people freak out. Wait, the whales are selling? Aren't they the smart money? Should I be getting out too? Hold on, let's think this through. Whale accumulation has been massive at different times over the past year. We've covered that. And yeah, some of these entities, whether they're large individual investors or institutional players, prefer shorter-term plays. Not everyone is looking to hold for 5 years. Some whales buy during panic, when retail is dumping in, fear, and then they sell into the rally. That's their game. They're playing the crowd. But here's the deal. I still believe that for the average person, and I include myself in that group. The best move is not to try and outsmart the market with fancy timing. You don't need to be swing trading. You don't need a 9-monitor setup. You just need patience and conviction. Because the less you fiddle with your portfolio, the lower the odds of you screwing it all up. There are swing traders and large-scale players who play that game well. That's fine. But for most of us, the winning strategy is still simple. Buy, hold, and wait. Now think back. When was the last time XRP price action looked similar to this? When did whales step in, push the price up, then take profit on the bounce? Let's take a look. Let me refresh your memory for a moment. I've brought this up a few times before, but it's worth repeating. Here's a headline from back on December 3rd, 2024. XRP records highest ever whale. Activity is 7-day price gains near 100%. Now, if I'm remembering correctly, the local high was actually hit the day before, December 2nd, when XRP reached $2.90, its highest level in nearly a decade. That turned out to be the peak for the next 6 weeks or so. After that, price pulled back and drifted sideways for a while. But ask yourself this, did the world end? Obviously not. Most of you watching this lived through that phase. Here's what that article from December said. XRP had surged a ridiculous 430% in just 30 days, hitting levels we hadn't seen since 2018. On top of that, large holders whales were moving huge amounts of XRP, according to CryptoQuant. The same data provider referenced in the recent article I just went over, but then came the classic twist. Whale activity could indicate a market top. Oh no, panic time, right? Except that wasn't the top. Yeah, it was a local top, and yeah, price cooled off for a bit. The market even stalled across the board. But what happened next? It exploded again. The consolidation was just the reset before the next surge. XRP had gone from 49 cents to $2.90, so naturally, some whales decided to lock in profits. That's what they do. But then what did I keep showing you throughout 2025? Report after report showing whales were accumulating again, scooping up XRP while retail was freaking out and selling. They were buying your fear. That's what smart money does. So don't be shocked when you see headlines talking about whales dumping. It's not the first time, and it won't be the last. This exact thing happened in December, and the outcome. XRP hit all-time highs in January, and again, in July, peaking at $3.65, whales played different games. Some are in for quick wins, some are swing traders, and others, like certain companies and institutions, are holding for the long-term utility of XRP. I've shared examples of public companies adding XRP as a treasury asset. Do you really think they're playing the 3-day swing trade? Doubt it. They're building for real-world use payments, settlements, utility. So you've got a choice. You can try to time every twist and turn and almost definitely lose money. Attempt swing trading and maybe do better, but still high risk. Or do what I do, buy, hold, and wait for the market to do its thing over the long run. That last option? It's the most stress-free, least complicated, and most realistic path for the average person to actually win. You'll hear a lot of people trying to sell you courses or indicators or secret trading systems because that's how they make money. But I've got nothing to sell you, so I'll just say it straight. The more you mess with your portfolio, the higher the chance you ruin your own success. You don't need to be a trading genius. You just need to believe that crypto, and XRP specifically, has a strong future. If you're right about that, you win. You don't need to be right about 50 other micro decisions along the way. And look, yes, sometimes XRP spikes, and some of the big players take profits on those local highs. That happened in December. But was that the end? No, XRP surged too. New highs afterward. And based on everything I'm seeing, we're still heading upward over time. Short-term fluctuations are stressing you out, I get it. But honestly, I don't think panic is warranted here. The big picture for XRP still looks incredibly strong, at least in my view. And if you've been watching this channel, you already know it's not about what happens every single day. It's about being in the market on the handful of days that truly change your life. Because here's the truth. Those life-altering gains, they come in just a few explosive moments. You either have exposure when it happens, or you don't. I know what side I'm on. Just so we're clear, I'm not. a financial advisor. Nothing I say is financial advice. Don't buy or sell anything just because I said it. Always do your own research.